Welcome back, guys, to module 6. In this module, I'll be showing you guys how to make use of all the elements that I stated from module 1 to module 5. How to make use of all those elements to get a high quality trade setup. Right? So what are the elements that I stated? The first element I stated was based on market structure. Second element was on break of structure. Third element was on imbalance. Fourth element was order block. Fifth element was liquidity. And right now we are on module 6. And on module 6, I'll be showing you guys how to make use of all these elements to get a high quality trade setup. So let's get down to it. So you can see that the first thing I stated to you guys after market structure was break of structure. And I believe you guys already understand what market structure is and how to trade from market structure. So if you don't remember, let me show you. So I'm showing you guys a downtrend market. So remember, this is how the downtrend market is supposed to go. This is how we're supposed to be trading the downtrend market, right? This is how the market structure of a downtrend market should look like, right? And this is what we are going to be trading here. So the second thing I showed you guys, the second element was break of structure. Break of structure, right? And you can see that from this zone here, the market broke structure, right? It broke structure. So that is element 1. We see our break of structure, right? Element 2, we look for imbalance. So we have our imbalance. The red circle signifies imbalance. So we have our imbalance. We tick that out. Element 3 is what? Order block. So we have our order block, which is a very nice refined zone. We tick off that one. Then element 4 is liquidity. And you can see here, the market generated what we see as what? Equal low liquidity, right? Equal low liquidity. And you can see that after the market mitigated that order block, after the market tapped on the order block, the market took out this liquidity and also this liquidity here. So if you are taking that trade from this zone here to this point here, you should have made a good whooping amount of money. So let's calculate that together, right? So if you're taking the trade from that order block there and you kept your stop loss above there, you should have made about approximately 1 to 3 on this trade right there, right? You would have made 1 to 3 on this trade right there. You can see that approximately 1 to 3 on that trade right there. Clean 1 to 3. What this simply means is for every 1% you risk, you make 3%. That means if you're risking $50 on this trade, you're going to be making $150 on profit, right? You can see that is 1 to 3. You can see that there. If you see it, you see risk reward ratio 3, right? That's what it is. So also after the market broke the next structure, the market, we denote the break of structure, which is we tick that out. We've seen our break of structure, we tick that out. We look for what? The next element, which is imbalance, right? We see our imbalance, we tick that off. We look for the next element, which is order block. We see our order block, we tick that out, and then we look for the next element, which is liquidity. And here you can see the market forged what we see as what? Trend line liquidity, right? And you can see that after that, the market took out the trend line liquidity and took out this structure. If you are taking your trade from that zone right there, you would have made a whole lot of money when the market took out that structure. So let's calculate that together, right? So from that zone here, you put your stop loss above the high there, you should have made at least 1 to 5. Yeah, a 1 to 5. A 1 to 5 risk reward, right? What does that simply mean? It means for every 1% you risk, you make 5%. And that means if you're risking $100 on this trade, you're going to be making $500 on profit. If you're risking $10 on this trade, you're going to be making $50 on profit, right? If you're risking $50 on this trade, you're going to be making $250 on profit, right? So this is how it is, right? So let's continue. Let's continue. So you can see that after that also, the market also, in this little point here, the market broke minimum structure here, and we had an order block area here. So you can see after the market broke that minimum structure, we look for our imbalance, we saw our imbalance, we look for our order block, we saw our order block, and then what? We look for the last element, which is what? Liquidity, and we saw our liquidity here, which is, first of all, the trend line liquidity, and second of all, the equal low liquidity, which is here, here, and the market took out the equal low liquidity and also took out the trend line liquidity, right? You can see how easy it is. This is so easy. It's so easy. Just looking for your simple 4 elements, which is breakout structure, imbalance, order block, and liquidity, right? And you can see that after the market took out that liquidity, we also had an area of interest, right, which is this order block area, right? And the market broke structure. We looked for our imbalance, we saw our imbalance, we looked for our order block, we saw our order block, and now we looked for our liquidity, and we also saw our liquidity, which is equal high liquidity, right? Or you can also see, I also saw this too, which is also the trend line liquidity, right? You can see that the market tapped on this, moved up, tapped here, moved up, tapped here, and then we took out that liquidity. So this is as easy as anything, and this is for a downtrend market, right? And if I invert that, you can see that also it's for an uptrend market, right? Continuous breakout structure, and we keep trading to the upside. So thanks guys, and keep being the best traders that you guys are, right? Keep being the best trader. Bye for now.